This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's discuss the situation on the gold market. We see that market has failed around the 60-40 area, the support, and we have talked about that since this is a long candle right to the target of the ABCD pattern, it could hide some unwelcome action and carry some negative surprises for us, because when the market forms such sort of the plunge candles right before the target of the ABCD pattern, it very often leads to the continuation. That has happened. So in fact, market now stands at the last barrier of the bulls, because this is the last significant support before the yearly low around 1625 area. Well, until market stands above the yearly low, it has the chances to continue to turn to the upside. From that standpoint, if you are bearish and you watch for the possibility to enter in the longer term on the short side of the market, it's better for you to wait when the market will take it out of this low, if it will happen. If it will happen, the market will break this area and hold below it, I mean the low around 1625 area. You will have the nice chances to get the move for the $100 lower per contract, so it will be around 1530 1550 area. Until this will not happen, the chances of upward turn still exists. And from that standpoint, I do not want to take short position right now. Whether I take long, that absolutely different question. So if you do not want to take the long position, that's and we could understand that. That's reasonable, because you could see solid move to the downside. You could say, hold on, that second, that is really a significant move down. Probably it's better to wait and see. It's not safe to take position on the long side of the market currently. Well, that's really a logical approach to the current situation. But taking short on the longer term perspective it's also a bit early, I suppose. Still, if you still would like to take some long position, because this will be a really significant risk reward, be aware of wash and rinse. When I'm speaking about the breakout of this area, I mean real breakout. So the market will move below this low and will hold there and will continue move to the downside. If it will be some sort of the wash and rinse, market will move to 1625, grab the stops right below this area and returns right back. That will not be the breakout. That will be just the stop grabbing and clearing the stops right below this area. That is the gold likes to do most of all markets. So you can see, for instance, right here, high retracement, clear out the stops, move down. That is very typical for gold market. Again, lows, grabbing the stops, returning to the upside. I mean that the wash and rinse of the gold market, you could see most of all other markets. It's really a very cunning market, as we said. So still, what we could do during today's price action. If you recall our yesterday's analysis, you should know that that is not just the FIB support area. That is also, as you can see, 127 extension of this ABCD pattern. Market now stands at support. As you can see, price action has touched this area. And that is also the target of two different patterns. The first pattern on the 4-hour time frame, that is butterfly buy, 1618 butterfly buy. That also has touched the target. It's around 1630 area. You can see some hint of the potential divergence, although market shows still bear trend by the MACD, but if trend will turn bullish, that will be the divergence on the 4-hour time frame. And that is also the target of the minor butterfly on the hourly time frame. So also 1618 extension stands precisely right here, and market has touched it as well. But there are some points that is not safe with these butterflies. What's wrong with them? Take a look at the price action of the right wing. It's really solid, long candles to the downside. You can see with this minor butterfly, you can see that market has hit 1618 target right by a single candle. That was the plunge for the $10 within the 1 hour move. You can see it on the hourly time frame. You can see this move to the downside. So in fact, market has reached the target very fast. When the market forms such acceleration right to the target of the butterflies have significant probability of the failure. And when butterfly is the such kind of pattern that if it will fail, it fail miserably. So it could be a really significant move to the downside. I just warning you. So if you still would like to take the long position based on these butterflies, be careful. That's the risk, and I have to warn you about this risk, because that butterfly is not very good. I prefer to see the gradual move with the butterfly right wing, but here you can see consolidation, plunge down, significant move, some price action, significant move to the downside. Again, taking a look at this hourly butterfly, it's really significant move to the downside, long candles to the downside. That is not very good from the perspective of a reversal and the completion point of the butterfly. If you would like to make the scalp trade, I do not call you for holding the positions for the big reversal, but the butterfly is treated as worked out if it will reach the at least minimum fib retracement level, and the minimum level from that 4-hour butterfly stands at 1650 area. That is the 3-8 resistance of the whole move to the downside of the right wing. If market will hit it, then we could say that butterfly has worked, because butterfly not necessarily assumes the total reversal and upward continuation. That is ultimate behavior with the butterfly when the butterfly is forming. But even retracement to the 3-8 resistance, let us treat the butterfly as worked out. So we could potentially take the scalp trade based on these butterflies, based on the daily ABCD pattern and fib support on the daily time frame, the 8-8 fib support. So we have the reason to enter long. Another question is do you want to do that or not? But we have the context, we have the patterns. So if you would like to try to trade it, you could do that. If you're worried about this significant move to the downside, as I said, that is understandable logic, and that is also the foundation to stand flat and wait for the further development of the market. So that is choice is up to you. So if you would like to take long, you probably could do that because we have the patterns. If you do not want to take long, you want to stay flat, that is your choice. If you are bearish, you could wait the breakout of the 1625 area, and after that search the possibility to enter on the short side of the market. Because despite how strong the current move down is, it's not very logical to take shorts right around the completion of two butterflies patterns and around completion of the daily ABCD and the fib support. Although a deep fib support, but still that is the support area. Well, so that is my current opinion. Well, and this is in fact the last hope of the bulls. But if market will hold there and turn to the upside, that will be tremendous risk reward, because you could place relatively tight stop somewhere around $20 per contract, and will give you around level that will be lower than the daily yearly low. And if market will indeed show the reversal to the upside, that could lead to the significant move to the upside. By the way, another possible way how to enter on the long side of the market, if you for instance do not trust in these butterflies, you could wait the wash and rinse. So if market will show the wash and rinse, grabbing the steps below and returns right back, for instance by some sort of the bullish engulfing with significant bullish engulfing pattern that could be formed here, well, that is also a nice opportunity to enter long. Maybe it will be even safer than enter with these butterflies. So you can see market gives us a lot of different opportunities. You just need to choose what is more suitable for you.